Good afternoon, everybody. Good morning to my friends in California and on the West Coast. I hope everybody's doing well. We have the Fed rate announcement hitting right now as we speak. I'm waiting to see what they do. I'm watching markets. I'm not expecting a massive reaction, but I am expecting, things to move. Let's see what we got here. Going into this, the market was betting 98% on a quarter point cut with a 1.3% chance of a half a point cut. Right now, based on what we're seeing, it looks like we got our quarter point cut. I haven't seen anything cross the wires yet. Here we go. Policy favor was unanimous. 25-point races cut. Fed says risk to goals remain roughly in balance. Labor market conditions have generally eased. So that is your, what we're seeing out of markets right now. And the reaction is not exactly anything special. I'll share my screen now. We got a big high wave candle out of that. And now we're getting a little bit of selling, but really not very much.
We got a weird VVIX print there, Mark. I don't know what happened there, but anyway.
Yeah, I mean, options went really wide.
Yeah.
And so it's not exactly a massive surprise that we would see, a weird VVIX print. Assuming things stay this way, and obviously we have to wait to hear what Jay Powell says, but I want to walk you through what has happened with, and we'll come back to bonds, but the VIX is really important over what has happened the last couple days. So here we are on November 5th, right before the election. The VIX is in the 20s. VIX futures, November is 1823, December 1782. Now that is off the highs that we had seen on, I believe, October 31st. But still, nicely bid. Here's where we closed on Tuesday after that major rally. And here's where we live now. We are in a full contango. Now, what I'm here to tell you is that this is history repeating itself. This is history repeating itself. I'm going to use my Wayback Machine, and I'm going to take us to where we were around the election in 2016. The election in 2016 was November 8th, almost 8 years to the day. We didn't have a Fed meeting, but take a look. Here we are on November 4th, right before the election. VIX is in the 20s. VIX futures, very similar to where we were a couple days ago. I'll take a picture of this so that you can see this, everybody. This is very important. So this is 2016. Folks, I'm joined. I'm Mark Sebastian. I'm your only option. I'm joined by Hans Albrecht. He is the income imperial overlord. We're working on a nickname for him, but that's what I've got right now. You're muted, Hans. I've got you muted for some reason. Maybe you guys can hear him. But so here's 2016. Let's go back to the Friday before the election. All right, we can go to the Monday before. Take a look. It is almost like they're twinning. Here, I'll put these next to each other so you can see it. Here's 2016. I'm going to shrink that a little bit. And then I'm going to cut 2024 right now. All right. Take a look, guys. Almost the exact same formation. The only thing that is holding up where we are, we're kind of holding in place. The only thing that was holding us up, and I'll take us back on our way back machine to 2016 again, because I want to show you where we ended up. Here's 2016 after. Put that right under. That's the Friday after.
Check mark.
Yeah, I can hear you now. And
Terrific.
here's where we are right now.
Wow. That's deja vu all over again.
It is take a look, folks. So right now, we're not getting any real reaction out of the Federal Reserve. Get rid of that. We're getting a little bit of a rally. You should see the VIX easing off.
How did that look over the next, say, 5 days, Mark, in terms of how that 2016? I know we didn't have quite the same sort of move in markets, but we had this compression of 40. But all else being equal, we could see this continue to compress over the next few days.
Yeah, I mean, by November 15th, a week after the election, the VIX was in the 13s.
And that VIX, those futures dropped a little bit more. So I don't know. Would you say that we could almost get to like a 14 VIX by the end of tomorrow? That's almost doable.
I mean, I don't think we'll get like to 14 exactly, but will we have a 14 handle? And when I say handle, what I mean is, so you look at VIX, it's currently 1529. A handle, so we would say on the floor, the VIX is trading with a 15 handle. So that's the handle. That's what's kind of holding everything together. And So I would say that we'll be somewhere around 14.5. I'm looking to see if there's any other major news. U.S. industry futures price in another 25 basis point cut in December after Fed rate decision. Yep. So let's take a look here. I'm going to refresh this. Obviously, now they're pricing in a 70% chance of a 25 basis point cut. So again, that is going to be generally bullish bonds, but they had priced in a bunch of that.
Yeah, the bonds have been. How's that move index looking? That's kind of the question, right?
Yeah.
We're sort of,
bond volatility continues to deteriorate.
yeah, I did a little iron condor on TLT, and
Yeah.
when it was down 350 the other day, it started to wonder a little bit, but it stabilized. So with any luck, we get that move down a little bit more. That's kind of a little bit of what's been bleeding into the VIX and a few other asset class vols. And, we really start to see a full dashboard of easing of fear, which is, starting to look at, I'm almost starting to look at even a little bit more compression in volatility, which, into the holidays. If the FOMC was the big question, right?
I would imagine that we'll get, right now, if you're wondering what is holding up markets, why are we still just kind of sitting here? S&P futures are bumping right up against 6,000 flat. SPX is currently, so SPX and SPX futures, they trade correlated, but they're correlated at 99.9%, right? Difference being S&P futures trade 23 and a half hours a day. But there is a spread here, and that's due to cost of carry that's priced into the futures themselves. That's priced into futures. So the interest less the dividends, and that with rates relatively high, that has the S&P futures trading at a premium to where the futures are. But S&P futures bumping up against 6,000. This is the real tradable form of S&P futures. That's kind of the resistance we're hitting right here. So Hans, for those of you that don't know Hans was a market maker on the TSX, the Toronto Stock Exchange and Options, for years. He ran several option portfolios for a large mutual fund in Canada. And I've known him we've known each other for what? It's got to be over a decade at least, right?
Yeah, probably about almost 14 years, maybe.
Yeah.
13, 14 years, yeah.
And he has joined the option pit trading team. He's going to be our lead option income trader, along with whatever other cool things he comes up with, because the guy knows how to trade. But he's going to be working with traders that want to produce income out of stock portfolios or enjoy selling options. He's going to be the overlord of those, if you will. But since we've got a few minutes before Jay Powell takes the mic, I kind of laid out my reaction here, what I think. What is your reaction to how markets have responded over the last couple of days? I mean, yesterday, I don't think anybody saw 2.5% coming. What's been your thought process of what happened, and where do you think markets are going?
Well, I hope you guys can't hear that. That's someone's trying to chop down a tree near me. I hope it's pretty far away from my house.
We can't hear it. We're good.
Okay, good. Well, I mean, I don't think clearly this wasn't expected based on the chart, the S&P chart that you just showed us. I think there's been, this was a kind of, I don't know if you could call it a known unknown, but there was a twist here, which was the dominant result from Trump. And so that kind of put things in a new light, right? And so I talked about this earlier in the day. I put out a note and said, look, there are certain moments that are sort of game changers. You could call it like a sea change. And this could be one for equities where we were potentially looking at a melt up into the end of the year. But what this has done is it sort of added the twist of, you've got somebody who's more pro, who's negative on regulation, who's interested in sort of pulling back some of the guardrails that are there, and that kind of, in a way, you can almost consider that a little bit of a free for all. So I think what markets are really trying to digest here is this potential for a bit of a free for all, and tech guys are. You can see Bezos, Pichai, Zuck. They're all kind of kissing the ring yesterday, which is kind of very interesting to see. They all sent out their congratulations, and we're looking forward to doing some good business with you. So everyone's kind of bowing to Trump and saying, listen, let's make this work. And, I think already a lot of people had de-risked. Even though we had VIX at 20, 21, 22, move up there, there's quite a bit of data that shows that hedge funds have been underinvested, particularly in the tech area. And the earnings have been pretty decent. So here we are kind of post election, and I think there's a little bit of a catch-up trade going on here. So potentially, I don't know how you'd want to sort of frame it, but there could be fewer checks and balances in the way things go. And of course, Trump's going to be, he's pro crypto. I think he's going to put together a very interesting team that's going to be really kind of pro industry. I think it's going to be good for stocks. We always have to wonder in the background, is this going to lead to some sort of inflation? Is this going to lead to things getting overheated at some point? And I was saying the other day, I said, I think the market is male because it can only kind of think about one thing at a time. And so right now it's running with, okay, everything looks absolutely.
We just lost your sound again, Hans. It's weird. Just leave and re-enter again. That worked the last time. To Hans's point, I agree with him. When he talks about regulation, I think the best way to describe that, because nobody wants a free-for-all, right? Does anybody really want a regulatory free-for-all? No. The market is male. It only thinks about one thing at a time. That might be one of the smartest things. Are you back?
I'm back. Can you hear me?
All right. Yeah.
All right.
So
I don't know.
we got you. You cut off right after you said the market is male. It thinks about one thing at a time, which is,
it thinks about one thing at a time.
Freaking brilliant.
It's male. It can think about one thing, right? It can't think about four different narratives. So at this point, it's going with, this was a little bit unexpected, and I think people are going to have to play catch up here, and so things are melting up. It's positive for financials. It's positive for a lot of areas where this was quite unexpected. So those amazing jumps in the banks, and so I think that's got to play out. I think there's some squeezing to go on. You're even seeing things like ARC takeoff, right? So even Kathy Wood is having a good time these days. So it is turning into a bit of a free for all. But having said that, I would not um, go so far as to say that this is an area to short. I definitely feel like this has some legs. I feel like by your nodding, Mark, I feel like you kind of feel the same way. I think you want to get out of the way. In my view, if you kind of held a gun to my head, I'd say, maybe we get a couple months of this. We've got seasonal, we've got corporate buybacks, we've got funky things that sometimes we talk about, these vol targeting funds, CTA, these strategies that are bigger than they ever were 10, 15 years ago that have a real impact on markets now. These things are going to act as tailwinds for stocks. Can we get a few down days? Sure. But we've had really a market acting like a VIX 12 with a VIX 20 costume on it. And it was a bit of a Halloween joke, I think. But here we are back at a 12, and I expect this market to actually act like, well, not a 12, but I expect it to continue to act like a 12, 13, 14 VIX, which is probably rip your face off, melt up to some extent.
You know what's fascinating is on October 31st, that peak that we showed, this is kind of at the money implied volatility. It was pricing in about 17.99 realized volatility. So how much the market is moving close to close after the 6th, 17.75. So they had been overpricing all the way through here, but kind of leading into the election, they almost priced it perfectly how much we might move. It's pretty interesting. And yeah, I think regulatory, nobody wants a free for all, but I think one of the criticisms of kind of a lot the regulatory state, if you will, of bureaucracy is the lack of regulatory clarity. I don't know how it is in Canada, but I can remember when I was on the floor, we would at one point in time, I'm not going to tell the trader's name, but the trader went to the SEC and asked, he said, I think what I'm doing, this is to me perfectly reasonable. Here's what I'm doing. I think it's fine. Can I get clearance? Can you guys tell me whether you think this is okay or not? And they were like, no, we're not going to tell you that. And then they came back and fined him $3 million.
Yeah.
And that is what people want, is regulatory certainty, right? This is what you are going to see out of the government, out of bureaucracy. And maybe that's that. I think that's one of the things markets are responding to here. There are obviously policy-wise, we'll learn more. Just an update on markets. We had this high wave candle, little rally. I expect we'll maybe get down to volume weighted average price. Then Jay Powell will talk, and then some decisions will be made.
I think it's going to be really interesting. As I said, I think this is the kind of result that, obviously a lot of people thought that he could win. But if it's sort of sweepish and now it has kind of a different texture to it, there's going to be some rejigging underneath the hood, right? Some people are going to be sort of thinking, okay, what's going to make sense here? We're going to get out of certain themes, certain sectors. We're going to get into others. On the other hand, I think what you have to keep in mind is that President-elect Trump, is he's a little bit of a showman. Sometimes his bark is louder than his bite is
for sure
vicious. So right. So I think on the one hand, so everyone's kind of negative China. I think he's somebody who wants to be liked in a way. And I think he likes to make a deal, right? It's the art of the deal. So he's going to make some deals. So he's going to talk tough, and then he's going to maybe dial it back and do some good things. So, I think there's room for that expectation too. So I wouldn't go to extremes with some of these themes that people are like, well, this is not going to work for the next few years. I think that's an opportunity to look for interesting things that do get oversold.
Yeah, I mean, you look at China, they dumped it on Tuesday, and now it's at its highest level since it topped out in October.
I'm adding some upside in BABA today, Mark. I sold some out of the money puts. I'm adding an upside fly. I think we could get a little pop. Why? Because people aren't expecting it. It's come down a little bit. Maybe that's a little bit of a contrarian play here. Sometimes you have to kind of throw those on. Now you can do that for very low cost. So for me, I'm not worried. Worst case, I own a really, really cheap stock. Yes, it's traded lower than $93, $94, but you can make some kind of you can make a case to own it down there, and I think it makes there's going to be some interesting plays out there in the commodities. There's going to be some. I think maybe nuclear. They've kind of sold it off a little bit. Maybe that looks interesting again. I don't know. There's some interesting things, right? So
there is the part that I think is really interesting in how we've traded is the move in nat gas. I think everybody thinks oil really shouldn't rally on Trump winning. Cost structure may drop a little bit for these groups because of regulatory hurdles, things like that. But the opening and exporting of oil, oil, we look at it in the United States, it is a world market. How much is being produced every day? How much is being used? And it's a ratio. So we have to refill the strategic petroleum reserve, so SPR. That'll put a floor in. But I don't think oil in particular is bullish. Nat gas is a little different because there is a glut of nat gas in the United States and Canada, correct?
Yeah.
There is not a glut of nat gas worldwide. But unlike natural gas, LNG, it's not a worldwide market. It is a kind of nation by nation market. So one of the things that has been really interesting is that there's this war raging in Ukraine while Russian nat gas flows through Ukraine to Putin's European enemies. So you have to wonder whether what ultimately gets this thing done in a way that is palpable to parties is using nat gas exports as a cudgel. Just a thought. But that is a threat, right? Let's come to a deal, and you can continue to be Europe's nat gas person, or we are going to export so much nat gas to Europe that you're going to go broke.
Yeah, no, that's
just an interesting cudgel that I was thinking about the other day. And that's a card that he can play because he's pro energy. So I don't think he's going to end. So
it's interesting, eh?
There's a lot going on there, and obviously we're just kind of talking about what's transpired so far right now. This has been a giant nothing burger. VIX is basically where we were before the announcement. I think people want to see what Jay Powell has to say. I will do us the favor of everybody. There's nothing we like more here at Option Pit than watching Jerome Powell.
We're gonna watch Papa Powell. You know what? I thought maybe the VIX would hang in there a little bit. Like I've had these VIX crush trades on. The Option Pit's had them on as well, and so it's been a fantastic trade. I thought we would wait till I thought the FOMC was a little bit more important, but boy, did they take it out of the VIX yesterday. It was everything, and it's confirmed by the action today. It's a big nothing burger, like you said. Yesterday was the day.
So, and you know, people think that he's going to get fired by Trump or Trump's going to replace him when his term ends. Trump put him in. So I don't know if that's going to happen or not. I gotta be honest. It'll be interesting to see whether
How are you?
Yeah, they might bump heads once in a while, but I think the key is you want to get along. You want to get along with Trump.
Yeah.
And let's see if Jay's is going to play ball there. But I think they both want the same thing, right? I think they want rates down a reasonable amount.
They want inflation down, rates down, and the economy to grow. That's what they're
Right.
asking for, but we just haven't.
That's all. We just want perfection, right? We want the porridge to be nice and warm and all the, everybody to be happy. So we'll see if that happens. There has been some rumbling already in some corners about, could we be looking at rate hikes at some point next year? So at some point.
Well, while we're waiting, you just heard Hans and I talk a couple of minutes about policy. We know enough to be dangerous. But here at Option Pit, we have a man named Francis J. Gregory, Frank, and he is a policy expert. He worked in Washington, worked in New York. He was a lobbyist. He was literally at the Pentagon yesterday, and he was and he is doing a private members-only discussion for all people who subscribe to Power Moves.
My colleagues and I remain squarely focused on achieving
join the presentation
goals of maximum employment
join
and
us
stable prices
here
for the benefit of the American people.
Click the link. You get Frank's analysis, and you can attend the meeting.
Our goals over the past 2 years. The labor market has cooled from its formerly overheated.
I'm going to be there. Frank is awesome. I'm going to be there.
Inflation has eased substantially from a peak of 7%.
Yeah, the VIX really hanging in there. The market is really waiting for the commentary, right? I don't think the quarter point was anything surprising. This is it. This is what it's about.
And returning inflation to our 2% goal. Today, the FOMC decided to take another step in reducing the degree of policy restraint by lowering our policy interest rate by a 1/4 percentage point. We continue to be confident that with
I've got it as loud as I can make it, folks.
recalibration of our policy stance, strength in the economy and the labor market can be maintained, with inflation moving sustainably down to 2%. We also decided to continue to reduce our securities holdings. I'll have more to say about monetary
policy. Can you get it on your phone, Mark?
Briefly reviewing economic developments.
Can you hear? Can everybody hear it?
Recent indicators suggest that economic activity has continued to expand at a solid pace.
I can't hear it.
GDP rose at an annual rate of 2.8% in the third quarter.
Oh, yeah, that's because you're not listening in the room.
Growth of consumer spending has remained resilient, and investment in equipment and intangibles has strengthened. In contrast, activity in the housing sector has been weak. Overall, improving supply conditions have supported the strong performance of the U.S. economy over the past year. In the labor market, conditions remain solid.
Someone in the room is chatting on
Payroll
Discord
job gains have
or something. You
from
can hear him
earlier
going.
in the year, averaging 104,000 per month over the past 3 months. This figure would have been somewhat higher were it not for the effects of labor strikes and hurricanes on employment in October. Regarding the hurricanes, let me extend our sympathies to all the families, businesses, and communities who have been harmed by these devastating storms. The unemployment rate is notably higher than it was a year ago, but it has edged down over the past 3 months and remains low at 4.1% in October.
6,000. This is a spot where it's dangerous to try and get long, folks.
And the jobs to workers gap has narrowed. Overall, a broad set of indicators suggest that conditions in the labor market are now less tight than just before the pandemic in 2019. The labor market is not a source of significant inflationary pressures. Inflation has eased significantly over the past 2 years. Total PCE prices rose 2.1% over the 12 months ending in September, excluding the volatile food and energy categories. Core PCE prices rose 2.7%. Overall, inflation has moved much closer to our 2% longer run goal, but core inflation remains somewhat elevated. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. Our monetary policy actions are guided
So
by our dual mandate to
59.71
promote
in
maximum
the cash
employment and
market
stable prices for the American
aligns
people.
with 6,000 in the futures.
We see the
for-
risks to
for
achieving
people
our
keeping
employment and
score.
inflation goals as being roughly in balance, and we're attentive to the risks to both sides of our mandate. At today's meeting, the committee decided to lower the target range for the federal funds rate by a quarter percentage point to 4.5% to 4.75%. This further recalibration of our policy stance will help maintain the strength of the economy and the labor market, and will continue to enable further progress on inflation as we move toward a more neutral stance over time. We know that reducing policy restraint too quickly could hinder progress on inflation. At the same time, reducing policy restraint too slowly could unduly weaken economic activity and employment. In considering additional adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. We are not on any preset course. We will continue to make our decisions meeting by meeting.
So like I said, the cash market,
As the economy
59
evolves,
over
monetary policy will
59.71
adjust in order to
is
best
basically
promote
we're
our
bumping
maximum
against
employment and price
6,000.
stability goals.
That is our ceiling
If
right
the
now.
economy
If we
remains
break through the
strong
ceiling,
and inflation is
that's
not
when the market
sustainably
would
moving
completely
toward
take off.
2%,
If
we
we
can
fail
dial
that
back
ceiling,
policy
then we're going
restraint more
to
slowly.
go back toward VWAP, which
If
is
the labor market were to weaken unexpectedly, or inflation
you know,
were to
like
fall more quickly than
59.65
anticipated,
ish.
we can move more quickly. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our discussion.
So take a look. Right
Thank you.
off
Given
6,000.
the expectation that the election outcome will produce policies that would meaningfully impact the U.S.
That's
economy
gotta be a
next
pretty
year,
good
how is the committee
call
taking
wall
these
right
proposals
there,
into
Mark.
account
That's going to be a
in decisions,
huge ceiling
including potentially the
by
decision in December? And can you
futures
give us
order.
any more sense of how proactive or reactive the Fed is prepared to be to changes in economic policies with the next administration?
Sure. So,
I mean, I think we can vote.
Boston Mini.
in the near term, the election will have no effects on our policy decisions. As you know, many things affect the economy, and anyone who writes down forecasts in their job will tell you that the economy is quite difficult to forecast looking out past the very near term. Here, we don't know what the timing and substance of any policy changes will be. We therefore don't know what the effects on the economy would be, specifically whether and to what extent those policies would matter for the achievement of our goal variables, maximum employment and price stability. We don't guess.
Even SMCI is coming off the mat today.
Now, just in principle, it's possible that any administration's policies or policies put in
How's
place by
DJT
Congress
looking today?
could have economic effects that over time that
Oh,
would
I
matter
have. Ooh, I
for,
got puts
our
on. I
pursuit
need to
of our
cover
dual mandate
those.
goals. So we,
Nice.
along with countless other factors, forecasts of those economic effects would be included in our models of the economy and would be taken into account through that channel.
Back to reality on that thing.
Yeah, I said it was one of the easiest sell the news stocks that I've
Chair
ever
Timmermans
seen.
from the Wall Street Journal. Roughly 1 year ago, when the 10-year Treasury was flirting with 5% and 30-year mortgage rates were near 8%, you
It
noted
was
how
sell
higher
the news
borrowing
either
costs,
way,
if they
no
were
matter who won.
sustained, could weigh on
Yeah.
economic activity. Given that you've said you
Crazy
believe
option
policy is
pricing out there
restrictive
on
and the
that
Fed
thing.
is now dialing back
I think
that
they were a
restriction,
500
are
ball.
growth risks presented
Yeah, it's
by
down
higher
to
U.S. Treasury
170.
yields
The
today
implied volatility
any
on the
different
front month
from
was up
those you identified 1 year ago
700% leading into the
when
election.
inflation was still meaningfully above your target?
So I would just say this: we've watched the run up in bond rates, and it's nowhere near where it was, of course, a year ago. I guess the
should
long
see
run
vol
rates are
starting
well
to
below that
pull
level.
back as
so
he's
we're
talking,
watching
but
that.
we
Things
are.
have been moving around, and we'll see where they settle. I think it's too early to really say where they settle. Ultimately,
Yeah, it kind of feels
sure
like the
we
pain
will
point
know
is
the
still
positions of what
a little to the upside here.
and I certainly have, but it's not really our job to
For
provide
equities, for
those
those who aren't
position. I will say though that
allocated.
it appears that the moves are not
A lot of
principally
managers starting to
about
pile
inflation
in.
expectations. They're really about a sense of more likelihood of stronger growth and perhaps less in the way of downside risks. So that's what they're about. We do take financial conditions into account if they.
A lot of
persist,
advisors
and
going,
if they're material.
I don't want to have that
We'll
uncomfortable
certainly take
conversation with my
into
client.
account
What do you mean you don't own NVIDIA? What
I
do you
would say
mean
we're
you don't
not, we're
own
not at that stage
the market?
It's just something that we're watching. And again, these things don't really have mainly to do with Fed policy, but to do with other factors in the economy.
If I could follow up, is the September SEP, are those rate projections still valid? Do they still seem relevant given where we are now?
You get halfway through the cycle between the last set and the next set. I wouldn't want to comment one way or the other. Let's talk about the data we've gotten since the last meeting. So in the main, the economic activity data have been stronger than expected. The NIPA revision was stronger. Certainly the September employment report was stronger. The October report, not stronger. Retail sales stronger. So overall, though, I think you take away a sense of
He is not saying a lot, folks.
some of
so
the
far.
downside risks to economic activity having been diminished with the NIPA revisions in particular.
Big sell order just hit.
Overall, feeling good about economic activity. So I think we would factor that in. At the same
If we get a
time,
pop over view app,
we got one
off of this,
inflation
that's a
report,
buy.
which it wasn't terrible, but it was a little higher than expected. So I think really the question is December, and by December we'll have more data. I guess one more employment report, two more inflation reports, and lots of other data, and we'll make a decision as we get to December.
Gina Smilik from the New York Times.
I think
Thanks
you
for
just said
taking
we're
our
not
questions,
sure
Chair
about
Powell.
December, right?
When it comes to December, what will you be looking at
About
specifically
which?
as you try to make
About
that
a rate cut
decision?
in
And
December,
then,
if
as
we
of the
can market
Fed's
just
economic
whether we
projections in
gotta move
September,
in.
you had written down 4 quarter-point interest rate cuts in 2025. Do you still think that those are likely? Is that sort of
Yep.
the baseline outlook at this point, or has that
Expectations came
shifted?
down a
And
little
if
bit.
it shifted at all, can you give a little bit of detail as to why?
Oh, S&P.
We don't fill out an SEP, and I can't
back.
characterize
What are bonds
one
doing?
that wasn't filled out today. So I can't really speak for kind of exactly where the committee is.
Bonds still holding strong.
I will just say for December, we're going to be, again, at every meeting, we're going to be looking at the incoming
Where's the
data and how
10-year
that affects the outlook. As you know, we're in the process of recalibrating from a fairly restrictive level at 5.33%. After today's move, we're down 75 basis points, and we're
And
asking
that's my
ourselves, is
computer.
that where
Sorry,
we need to
folks.
be? You know that we're trying to steer between the risk of moving too quickly and perhaps undermining our progress on inflation, or moving too slowly and allowing the labor market to weaken too much. We're trying to be on a middle path where we can maintain the strength in the labor market while also enabling further progress on inflation.
All right,
We
I think
that's where we
if
are.
we cross over
That's
view
the
app
question we're
for
gonna be
day
looking
traders,
at
here's an
in
opportunity to go
September
long. If we get a
and
pop
in
over
other
volume at
meetings.
average price,
And again, I can't
think
really
we're gonna get a
update
little
you
pop
on the
here.
committee's thinking
S&P
because we don't fill out
futures
SEP
are
at this meeting.
Yeah,
back to
totally
59,
appreciate that. I
89,
guess when it comes to
75, which
your
is
own
basically where we
thinking, do
were
you think that a full percentage point of
this
rate
morning.
cuts in 2025 is a reasonable outlook?
Again, we're going to wait and see how things come in December. I mean, it's just, I would put it this way. We're on a path to a more neutral stance, and that's very much what we're on. That has not changed at all since September. And
Yeah, they love them all. It was kind of interesting to see.
where the.
I mean, it made sense. They didn't.
A whole
They didn't
6
love
weeks of data to
MAG
make that decision in December.
yesterday,
Obviously,
and
not
especially
all of that
social
ran,
media. We
but
saw Meta
say,
really act
Yeah.
poorly. That was
would say.
That was interesting. And it's completely shrugged it off
Yep.
today. It's up $30 from yesterday's low.
Which is crazy. I think the bigger regulatory. Oh, guys, what did I tell you? We get a
Thanks,
review
Howard
after you want
Schneider
to go
with Reuters.
long.
I wondered if you could please elaborate, explain a little bit.
I think the biggest regulatory risk, and they already have some issues, is Google.
In the first paragraph, where you say inflation has made progress, dropping the word further progress.
Yeah, I hate to say it.
And in the second
Because I love it.
paragraph,
I love YouTube. My kids just want to watch YouTube all the time. Like, it's such an incredible asset.
Towards its 2% goal. Is there any
Oh, a bunch of people are
substance
hopefully
behind
watching us on
either of
YouTube
those,
after the fact.
Changes in language. Is it meant to open the door to a December pause? Is it meant to communicate anything about the stickiness of core inflation the last 3 months?
Not really, no. So let me tell you,
It's hard for me to get bearish on Google,
the
but
test of
there's no question there may be better
further confidence
places
was
to sit until,
was our test
who knows when.
for the first rate cut.
All right, we're basically
And
now
so
back
we
to
met that
exactly
test
where we
in
were
September.
when the.
And therefore, we take that test out. If you leave it in,
Here's where we
then
were.
it's new forward guidance. It's brand
when
new
the-
forward
when
guidance.
the-
What do you mean by it?
Here's where we were
Are you requiring yet further
259.
Say yes
Yeah,
or no
no
at every
warning,
meeting,
just
whether
for
we
you guys
make
to
further
watch.
progress. The point is, we have gained confidence that we're on a sustainable path down to 2%.
MicroStrategy
That I would
guys
say
today,
is
boy,
what that's really all
they
about.
still
It's not meant to send a signal.
they
Neither
still
of those
like
is
the
meant to
Bitcoin
send a further
names.
signal. And saying further
Today?
progress, it becomes a test.
Yeah, they're
They got
it's a good time to be doing a
they're
lot
firm. They're not going
of,
nuts, but
forward guidance. There's a fair amount of
you got to
uncertainty
think that
in
this
what I've said.
administration is going to
The
be
path
quite
that we're on, we
interesting.
do know
Long term, yes. I think
where the
near
destination is, but we
term,
don't know the right pace.
if I
and
was
we don't know
long, this would be a
exactly
spot
the
where I'd be
destination
taking
is. So
profits.
The
Yeah,
point is to find
They are
that,
raising vol a little
to
bit.
find the
Dow
right
just
pace and the right
tanked.
destination as we go.
Well, I
And
don't know,
think
tank
there's
is a
fair
hard
amount of
word.
uncertainty about that.
But,
I
the
don't wanna
banks
tie
continue
yourself
to
up
really
with
deteriorate.
guidance. You want to be able to make
But that's
sensible
actually,
decisions as you go.
I say that after they rallied 15% yesterday or some ridiculous
Steve
amount.
Lees
Yeah,
on CNBC.
that
Mr.
was
Chairman, you
insane.
talked about
The Russell
higher
just softened
rates,
up.
perhaps from an expectation of higher growth. You didn't talk about it in terms of expectations of higher.
Yeah, I've actually got
Is that something
some covered calls on my
the recent rise
IWM
in-
position, trying to generate some income there.
rising
And
deficits?
kind of run through a little bit. The Russell's been interesting. That's where they really didn't quite expect
Again,
the
I
Trump
don't have a
win
lot more to say
for the
about
dominant
on
one.
what's driving bond.
Because a higher for longer
In
environment
terms of
is tough for, a lot of the Russell is a bit junky, a lot of it's floating rate, and higher for longer is not going to be great for them. So it's
case. Let's say
some big
Congress
questions
is
overhanging.
I don't love the Russell
Doesn't matter what's
for
in the context. So
with where we are
would
with what
follow
we've seen
that.
out of
At a certain
the
point,
10-year
we'd
and the
think
30-year
we'd see the
treasury.
outline. So we'd
I was
sit
real
down,
bullish into it,
and
but
then we'd wait and we'd wait. And
with
at
the
a
rate
certain
cuts
point,
and with the
staff would brief
deterioration in the 10-year
FOMC
note,
and say, these are the likely effects. There's lots and lots of literature on the effects of tax policy changes.
I think
on
I'm
various
a
parts of the
little
economy.
less bullish
So
the
we
Russell
try to get
2000 than I
smart on
was.
that, and then the law actually passes.
Yeah,
But
maybe
I
a little
think the
more.
odds are at
Put
a,
it-
at
we
a,
probably
at a
run an
point where
alternative simulation before that
they're a
happens,
good,
just to make
good
people
kind of
trying to
pivot
understand it.
long.
Then when it actually passes,
because
it goes into the model.
If the bond market
along with a
does,
million other
like if
things.
we get
So,
out of here and the
we
bond
have
market
a
breaks
very
below the
large
lows of
economy. Many
yesterday,
things are affecting it at any given time.
that will be the top of the
And,
market.
a law change
Because
of some kind would go in there. But
if you
it
take a
would go
look
in,
at
but
when
it
we've
would-
been below
it's a
the level,
process
kind of
that takes some
90
time.
for a
Clearly, the
level,
legislative
we
process
closed above 90
takes a
in
lot of time.
TLT.
Of course, the real question is not
April-
the effect of that law.
April of
It's all the
2024.
policy
How did the
changes that are
SPX
happening. What's
do
the
in
net effect?
April of
And, the
2024?
overall effect on the economy.
Oh, what do you know? That was the last time it had
That's
a
process
sell-off
that
outside of
takes
August.
A lot of time
Look,
and that we
boom,
go through all
sold
the
off,
time with
sold
every
bonds bottom.
administration constantly. And this
Yeah,
will be no
that's starting to
different
get people a
than
little bit
right
nervous,
now.
right? So
there's nothing to model right now.
Previous
So
time,
this isn't
Such
too
an
bad.
important stage.
Yeah,
We
a
don't
little
know what the
other
policies
time,
are, and once we know what they are, we will
October,
have a
September,
sense of
October 2023.
when they'll be implemented or
That's when
all
TLT
those
got
sorts of
smoked.
things.
How
So
did
I think
SPX
I
perform?
would just say we're not doing that now, and all that will take
What do you
time,
know?
and
It
will be
sold
very
off
much
during that whole
regular
period.
order
Actually bottomed
when we do that.
1027.
I could just follow up on Nick's question. Are the current rates something you feel like you need to
And-
lean against in that?
Oh, what do you
they
know?
go against
1027.
the direction of policy by adding restrictions to
We
the economy? Or do you just
started
take them
rallying.
as a given and perhaps a signal that you should do less?
Option.
Look,
So
I just think the first question
when
is
it comes
how
to the
long will they be
market,
sustained? If you remember the
stocks are the
5%
tail.
10-year people were drawing were
Options are the dog,
only to find 3 weeks
and
later,
bonds are the
10-year was
owner
50
and the
basis
guy
points
carrying the
lower.
leash,
So
holding the
it's,
leash.
it's material changes in financial conditions that last.
You can slap a
that are
muzzle on
persistent,
that thing
really
whenever it
matter.
feels like it.
And we don't know that about these.
So
what we've seen so
us
far,
option traders, it's,
we're
it's really
watching
fun
it,
getting
we're
to be the
reading,
dog,
we're
getting to be
doing
the dog now. All right, we're
decompositions
trying to
and
break
reading others,
6,000
but
again in
right
futures.
now it's not a major
Watch this
factor
level.
in how we're
We
thinking
can
about
break it and hold it, like right there. That is when things get
Thank
crazy.
you,
But what do you know?
Gaber at Associated Press.
6,000, we stay.
You mentioned the positive economic
Yeah.
data that we've
There you
seen
go.
since the September meeting, including the revisions. To
And these up, you know what the upside move lately has been in the last few days has been
we saw stock market
phenomenal.
jump
Sometimes
yesterday.
people forget that
That's renewed
upside volatility is still volatility.
Why
So
aren't any cuts at
you know,
all?
if you get moves like that,
With
the
this
VIX can't get too low. But
So
if we
you're
start to
right.
see a little bit
As I
of
mentioned, and
almost
as you mentioned, the latest
pinning
economic
around that
data has been
6,000
strong,
level,
and that's,
kind of
course,
a little bit of
a great thing and
give and
welcome.
take,
But of course,
then we
our
could really
mandate is
see a
maximum
compression,
employment and
a further
stability.
compression of all.
And we think
All right.
that even with today's
Here's
cut,
our potential
policy is still
breakout.
restrictive.
Futures
We
are over
understand it's
6,000.
Not possible to say precisely how
Now,
restrictive, but we feel that it is still restrictive.
I'd like to see a little bit more
And if you
clarity.
look at
We're
our
getting
goal
there.
variables,
I think the best
labor
trade
market has cooled
right
a
now.
great deal from its
I've got
overheated
everyone in
state of
election
2 years
trade.
ago,
You want
but it's now
you want a
essentially in
free
balance. It is continuing to cool.
trade idea. Now he's
albeit
going to continue to talk.
at a modest rate.
You saw me at
And
the
we
top
don't
of the
need
show
further
talk
cooling,
about
we don't think, to achieve our
where
inflation
I
target. So that's the
saw
labor market.
volatility
Inflation
and
has moved
what
down a
we'd
great
seen with
deal
elections.
from its higher highs of 2
And you
years
just saw
ago.
Andrew drop
We
in what
judged,
he's
as we
doing.
mentioned, that
Probably,
it's
I
on
don't
a
know if you
sustainable
are,
path back
if
to
you're watching me on
2%.
YouTube.
So the job's not done on inflation.
But,
If you look at those two things, we judged in September that it was
with what we're
appropriate to
seeing out of
begin to
markets
calibrate our policy
and with
stance to
how
reflect this
relaxed
progress, and today's
the
decision
reaction is
really
today,
another step
that gives
in
us
that
a
process.
clear path to
Overall, as I
14.
mentioned, we believe that with an appropriate
I would be a
calibration of
buyer.
our policy stance, we
Andrew, I
can
like your
sustain
idea on
strength in the
stealing it.
labor market, even as the policy stance enables further progress toward our inflation goal.
I did something
Great.
a little
And just to
different.
follow up,
I bought the
What might cause you to pause rate cuts in December? What kind of economic
VIX
data would lead you to
13
that?
puts in December
path?
are
Thank you.
18 cents, or you
So,
can go for the November 14 puts that are 19
We haven't,
cents.
made any decision.
Both of
about that
those
at all, but
could
so we're in the process,
be
as I
valuable.
mentioned, of moving policy
Sure.
down, our stance down over time to more neutral level. And as a
think
general
he
matter,
basically
as we
done
move
talking.
ahead, we are prepared to adjust our assessments of the appropriate pace and destination.
All right, 6,000
as
did,
the outlook evolves.
6,000 did
So, for
not
example,
hold.
If we were to see the labor market.
That piece looks interesting, Mark. Would you consider spreading it, or are you
As
For
we
19
look at
cents,
that are
I'll just
plausibly
buy 'em.
Neutral.
And
Like-
if
close to
they
neutral,
become
it may turn
valuable,
out to
I
be
will.
appropriate to slow the pace at
I'll
which we're
start
dialing
spreading
down
them.
restrictions.
Like I could probably leg into
Again,
the
haven't made any
14,
decisions
13 and a
yet,
half,
but
13 put fly
certainly
for
a
even money.
possibility. If you
But,
can think of it as similar to,
You know, what I'll probably do is
what we
buy
did
the
with
14
asset
puts and then
with-
wait
with
for the
asset
13
runoff
puts to
with
be
QT.
worth 19
So we
cents
reach
and
a
then
point
sell
where we
and then
slow
own the
pace,
spread for,
much like
for
an
free.
airplane
I'm buying the
machinery
VIX
airplane
November
slows down.
20th,
And so
14
you know,
puts, and I'm
we're
buying
thinking
them
about that,
for
but it's-
19
It's
cents.
something that we're just beginning to think about.
All right. Folks, I just want to remind you one more time.
So, with the noise in the job,
You heard
market
Hans and I
recently,
talking about-
and you look at the Fed's
Here,
favorite
I'm gonna-
inflation.
I think
piece, the
he's done.
inflation overall. It's
saying anything of substance. You heard I talking about policy and regulations and all the important pieces that are going to be changing over the next few months. He and you heard me talking about what my idea on a Ukraine solution. I am not a policy expert. I don't have any DC insiders. I don't talk to people in Washington, DC. But you know who does is Frank Gregory. And
were you at the Pentagon yesterday, Mark?
he was in the Pentagon yesterday. You have the opportunity to join Frank. You can join his e-letter, Power Moves. You can join his e-letter, Power Moves, and you can attend his private invite-only event for Power Moves subscribers next Wednesday. But you have to be a subscriber to Power Moves. So what's the downside? You get a free, full access private event with Frank to explain what he's seeing in Washington, and you get his weekly updates on a regular basis. And for those of you that don't know how valuable that is, I'm going to point out one stock. New Scale Power. Frank, I'm going to go out on a one-year chart here. Frank pointed this one out to me in January and February of this year. And I'm long it for, I want to say, about $3.40. It's $22. Here's another stock that Frank pointed out to me. And I wish I still held it because I sold. I got into AeroVironment. Boy, I got to go back. I got into AeroVironment, I want to say, somewhere back in here and sold out somewhere up in here. My only regret is that I didn't ride it all the way to here. If you are interested in stocks that are going to win because of the broad hand of the federal government, this is the e-letter for you, the newsletter, and again, you get access to that private event. So we have pinned the link to join at the top of this discussion, and I've dropped it in chat as well. So has Mark Sebastian Fan 007. And there you have it. So join us, join this e-letter, join us on Wednesday. And folks, this is just the beginning of what you're going to hear from Hans and all the amazing things that Hans is going to have to offer. Hans, thanks. Thanks for hanging out with me for an hour. I really appreciate it.
My pleasure. It was fun. It's fun. These are interesting times, which is just how we like it. Just how we like it.
May you live in interesting times. We do indeed. All right, folks. I just want to once again thank you for being here. Join Frank's e-letter. And so for the Imperial Overlord of Option Income, Hans Albrecht, I am Mark Sebastian, your only option. We hope you have a great rest of your trading day. We'll see you guys soon.
See you guys.